Hey, hey, hey. Gonna go live on Instagram as well. Super windy today. So it is 4 o'clock Friday afternoon, wrapping up the day. Got a couple more calls. Then it's the weekend. Shout out to the homie Zach. He just closed a hotel deal. So big part of my plans this weekend is to go celebrate at his hotel tomorrow. So very much looking forward to that. Have a little day party, which I have a feeling may turn into a night party as well. So, and then Sunday, I have a friend coming in from the United States. So always fun dragging your friends to enjoy some international walkabouts. Cool. Darius, what's up, homie? Sean, good to see you on here. All right. So as y'all are coming in on YouTube, be sure to say hello because I appreciate it. Feel like, this is an interaction. Feel free to put any questions you can see from the title. I'm going to talk a little bit about something that's going to be actually a focus in Dealmakers Institute this year. You still have a little bit of time. We've already got kind of this initial cohort, but I think Curtis is still accepting folks. So if you're interested in Dealmakers Institute, now's the time to reach out and join us, dealmakersinstitute.com. So one of our big focuses this year is going to be paper investments. So obviously that's something that we spend a lot of time doing on the fund side, something that I've done a lot personally, but we hadn't done a ton of training around it in Dealmakers Institute. But I want to talk about the why because it's kind of a complicated subject, but I think understanding the why behind it is what gets you motivated to actually do the work to try to figure out how that whole world works. So I've talked before, every city that I've been in, major city all over the world, when you land, you notice that the largest buildings in every city all over the world is usually a bank. And there's a reason behind this because the banking business is so profitable. And my lesson from this came when I sold a business back in 2006 that had a bunch of debt associated with it, and I was still on the line for the debt when I sold the business, and the buyer ended up getting into trouble like a lot of business owners did in 2008. And so I had to get in and learn a lot of this. Actually, Curtis just joined. I was giving you a shout out, Curtis, saying we still have a little bit of space or I guess time wise, in Dealmakers Institute. And one of the things we're going to be talking about this year is this whole subject of paper assets. So be sure to hit Dealmakers Institute. Curtis will jump online, and he's just a wealth of knowledge. Absolutely killing it. I think alone did maybe 4 or 5 acquisitions last year. I'm probably understating it, but at least 4 or 5 acquisitions last year. So an amazing guy to talk to. What's up? Thanks for saying hi, Curtis. So let's talk about this. So after I went through that, 2008 hits. Literally it's a choice between either I get back in this business, help navigate this, and we come to a some kind of resolution with this debt, or I have to file bankruptcy. And it's just like, okay, I do not want to deal with this. Actually, my mom just jumped on. She will be familiar with some of the turmoil around that period of time. because it was just like a ton of stress dealing with all this debt that was associated with real estate and all this. And one of the things as I start to dig in was realizing that, man, the banks and lenders and investors have basically made as much money off of me as I had as the investor and entrepreneur that was doing the work, borrowing from them. And so I'm like, okay, after I get through all of this madness, I'm going to try to figure out how to get to the other side of that table. Because if you can make just as much money by putting money in, and keep in mind, this wasn't even their funds, they raised that capital. So their skill set was having the ability to, number one, go and raise the capital. Secondly, find people like me who were good borrowers. Like I said, like even in a tough situation, I wasn't going to bail out. Being able to do due diligence on the deal, and then they make a spread between where they're paying their investors and where they give me the funds. And so, what a lot of people don't realize is that you can basically become the bank and invest in these paper assets, and that it really is a skill set. I think a lot of people get discouraged by the idea of having to raise capital. And I think even before, it was really tough. It was a tough thing to raise capital. But now, in a world where they're printing trillions by the week, all of a sudden it is just easier than ever to solve that part of the equation. So then it just comes down to the other parts of the equation. It's being able to do due diligence and then being able to deal structure. So, but part of this is just why. So part of this is understanding the return on capital, return of capital, and then return on investment. And I think one of the things that most entrepreneurs, especially people that are out there hustling, and you may have a business, you may be doing coaching, you may have an e-commerce store, whatever. With all of those things, one of the things that people don't put into the equation is the amount of time that they're putting into their business, and calculating what that time really costs. So, what's the cost of that time? And my favorite thing about some of the financial investment or paper investments is that you can still generate cash flow by investing in a business on an equity level, or investing in a promissory note, or doing what we call a convertible note. There are all of these different ways to invest in somebody else's business and not have to invest your time and still get a really great return. And what you'll find is that because you don't have to put in time, now those other skill sets are so scalable. So one of my favorite things is, I can go out and do a deal. I would take 10 times less money to not have to put in my time into something than I would invest in something that is going to take not only my money but also my time. And we just live in a time which is interesting, where people are devaluing the value of their time and then overvaluing the value of money, which, like I mentioned, like they just print with a press of a button, just more trillions. It's not as valuable as you think it is, and it's literally decreasing in value. There are numbers that say just in 1 month, last month, there was a 7% inflation rate, which is absolutely astronomical. It's just unreal. So the other part of this, which I think is interesting, is the ability to control the income and have some safety and recourse. When you're in your business, if you take that case with even with me and my business, if I'm borrowing, or I have these people that have put money into the business, me as the owner and entrepreneur, if I lose that business, I don't have anybody to go back to and try to get that money. Well, if you're a bank and you invest and the entrepreneur loses everything, you actually have recourse after that. If the business is long and gone, depending on what assets you have a lien against, you can still go after those other things. So there are all these benefits that people overlook. And I think that there are two parts of this. Like I said, one part is overvaluing money and undervaluing time. And then the other part, just thinking that this is something that we can't do. This is a game that we can't play. And it's just like there's this invisible wall. It's one of the greatest things that wall. Excuse my cough. It's one of the greatest things that Wall Street has done. It's just like keep this wall around what they do and not explain it to people. And it's the one business where, there are trillions being made and moved around, billionaires being made constantly, and nobody really looks and says, oh, how can I emulate what they're doing? So I'd encourage everybody to check out opportunities there. Let's get to some of y'all's questions. Cool. And if you want to see the questions, pop over to YouTube. Oh, for the folks on Instagram. All right. Got G Combs. What's up, homie? Says, hey, Ace, thanks for popping in. Chapman Walsh. I like that first name, man. That's a great one. Says, what's up, Ace? Montreal, what's up, homie? Thanks for coming. Alvin Dixon throws up the deuces. What's up? Thanks for popping in. Darius says, made it on time. Awesome. Chapman said he's definitely interested. I guess I was talking about Dealmakers Institute. For that, check out dealmakersinstitute.com and jump on a call with Curtis. He is the man. All right, let's get to Tim's question. So, Tim's question is, any thoughts on the Series 65 exam? Should you link up with a fund manager first before attempting to take the exam? I'm sure it wouldn't hurt. So yeah, I actually was licensed. This is in regards to getting licensed to offer securities and those kinds of things. So there's one thing that I will say is that to do a lot of the things that I'm talking about, you don't necessarily need this license. I actually was licensed. I had I had 7, 64, 65. And I ended up letting my licenses go because it basically interfered with what I can do, because everything has to be reported. Everything kind of comes under a level of scrutiny by not only the SEC, but also your more, and not even, a lot of times the issues aren't even with the SEC. It's really with whoever you hold your license with. So whoever's holding your license, they have some liability. So it's really for them. It's like, hey, I don't want you doing any of this crazy real estate stuff, all these other things that you're doing. So I actually gave up my licenses because it does limit some of the things, I'm not offering publicly. You'll never see it with our fund, with anything. Like, I had somebody who was saying, hey, I'm an investor in one of your funds. It's like, well, my funds aren't publicly offered. The only way that you're getting in is like, it is a direct connection. So you're never going to see me put up a link and say, hey, go here and invest in one of my funds, unless it is a crowdfunding offering, which is actually something that we are working on. And we've done once, and even then I didn't necessarily put that on my personal social media. And so there's some of the ways around it, I will say. I do think that if you're just getting started, to be able to work with the public, that's a benefit to getting the Series 65. And then I definitely think that connecting with, it doesn't even have to be a fund, a broker dealer is really vital to that whole process. So I definitely would say, if not a fund, definitely someone who has a broker dealer, I would connect with them. All right, so that's over here. Check out. Got Intercontinental Receipts popped in. What's up, big guy? Good to see you. Shalina, haven't seen you on in a while. It's really good to hear from you. I would love to get an update on what's new with you. Shalina was in our Deal Makers Institute program. Um, cool, cool. Let's see. Luan says, wow. Thanks for popping in, Luan. Here's another question. How do you find a broker dealer? So broker dealers, there's some that are smaller, and just to so broker dealers are all they're big ones. You know, Goldman Sachs would be considered a broker dealer. A financial advisor could be a broker dealer, but they may have a somebody else who is their broker dealer. Morgan Stanley's a broker dealer. You know, so um, I'm saying the big names because they're going to be like those are the national names. But like in my town in the U.S., there's one called Cox Wealth, and that's basically a small broker dealer. So you're going to have a basically a financial advisor that's in your town that's going to be a small broker dealer. Not all of them would be, but some of them would be. And you just call them and just tell them, hey, I'm thinking about getting my 65 license. I may put it with you guys. And what that allows them to do is they get a little bit of the commissions if you decide to work with them. And it's a big, I mean, you know what, as I talk about this, so let me tell you what I think the big opportunity is. I'm sharing something that's kind of, I've kind of had tucked. I've had this tucked. I've been talking. Shout out to Andrew. We've been talking about taking advantage of this. We actually we're reaching out to some some business in the financial space, and actually Andrew did an amazing job of finding a acquisition that we're going actually I just got off a call. We'll probably close at the end of this year, but looking at the financial space. So in the financial space, there are a lot of baby boomers, just like across everything. Baby boomers are about to exit the workforce. They're selling their businesses as well. So the small businesses owned by baby boomers are being sold. And then, obviously they're exiting the workforce. The other side of that is a lot of them are selling their stock, and they're no longer in the accumulation stage. They're now in the retirement stage, which means, hey, it's time for me to get out of this stuff and start to just live off the money that I've saved up. So you want to think about what that means. What that means is two things for the financial advisory space. So a lot of these people that have these Series 7, Series 64, Series 5, they're baby boomers, so they want to leave, and they're basically in a business where they have clients that they're going to be leaving. So it means that they need to sell this business, and the business is going to be worth less and less. So for us, there's an opportunity to go into those businesses, get the licenses required, and in some cases work under them until they kind of just decide to leave and probably just leave the business, or go in and just buy those businesses from them and take over the broker dealer that way, or take over the financial advisory firm that way. So it's a very big opportunity. Those folks are going to be in businesses that are going to be difficult to sell, and so you can end up with something where it's like, hey, I'm not going to pay you up front for this business. I'm looking at your clients. They're all either going to be retired or going to be passing away or whatever. Like, there's not a lot of value in this book of business. So what I'm going to need to do in order to take over this is have a no money down deal with earnout. So you'll get a little bit of money continuously. You won't have to work in the business, and you still will get some cash, but I'm going to take over the work involved with this, but I'm not going to pay you any money up front. So it becomes a cool opportunity if you're interested in a space to get into something, have a book of business, have a reputation, to go out and get a new book of business and build relationships with some younger folks, and not have to put up a down payment. So that is what I would be doing if I were looking at or interested in this space. Cool. Pop over, answer a question on Instagram. I wish that Instagram would integrate with StreamYard. Make this so much easier. So it says, what do you think about Transworld Business Advisors? So I was an investor in a Transworld in Tennessee, and it was standard business. They're business brokers. There's nothing amazing about them. There's nothing bad about them. There are a lot of business brokers out there, and it's really difficult in that space to set yourself apart. It's not about, I guess this would be the better way to answer that. It's not about Transworld Business Advisors, because that's a national business. Oh, thanks so much for the license. Thanks so much for the reminder. Like the stream, guys. It costs nothing to hit the like button. There's no reason not to do it. So be sure to hit the like button. So you're looking at Transworld. That's an international. I mean, it may just be national. Actually, I think they may have some international units. It's a national thing. And what happens, you have these individual business brokers, and every business broker is going to have a different level of hustle, a different level of connections in their community. It's such an individual thing. It's not like McDonald's. Like McDonald's, you're going into one, you're gonna get the exact same thing, no matter what 16-year-old is back there on the fries or on the burger or whatever. If they're really good, if they're a little better, it's gonna look like the actual advertisements. But if they're not, then your burger's gonna be smashed up, but the taste is still gonna be the same. When it comes to other franchises like Transworld, and those kinds of things, there's a couple we were talking about financial advisors. There are a couple that are in that space. It's going to be so individual, because it's literally a person that has to go out there and do it. The person has to build those relationships locally with potential businesses that want to sell. Some of the Transworld brokers are creative and open to doing things like earnouts and some of the things that we talk about and we want to do in a deal. For other brokers, they're like, as soon as you mention anything creative, they're like, yeah, like, no, I'm on to the next person. Like, I don't want to deal with that. So I wouldn't think about it as a national brand. So let me know. And then the other thing you may be asking about as far as becoming a business broker, kind of the same thing. I'd be looking at what's the training that you're going to offer, who have they set up that has been successful, and talking to those people, asking them what it what it took for them to be successful, and making sure that you're capable of doing those same things. So I am a big fan of franchises. Especially, I would even look at, if you were going to do it, my one caveat to franchise is, like, I still want to buy an existing friend. I don't want to start anything from scratch in life. There's just, certain, going back to the value of your time. If you value your life on earth and you value your time, and you're not interested in being like Mark Zuckerberg or Steve Jobs, then there's just no reason to start something from scratch. There's too many things out there that are already making money that you can take over with no money. So why would you take your life and put it into something that may make money and it may not? It literally just makes no sense. Now, one of the things that I look at, like, somebody had a post, one of our boys, shout out to Darius, he sent me this, and it was talking about Tom from MySpace. Tom from MySpace, he made whatever his half a billion was, and just, we have not seen or heard from Tom since. He's not like these other guys, like, Mark Zuckerberg is like, no, I'm going to try to take all your information and get your data, and then I'm going to send it over here, and then I want to track you everywhere, and then I want to get the metaverse, and I want, it's like, what, or Bezos. It's like, just literally, you have these other folks that are interested in taking over the world. For me, Tom's a bigger hero of just like, man, like, I'm not trying to have endless amounts of money. I want to have a great life and be able to take care of a family. If I decide to have a family one day, be able to travel, see the world, like that's just what I'm interested in. So there may be people that are on here and are like, no, like I'm trying to be, the next Darth Vader version of Mark Zuckerberg. And for those people, like, yeah, go and like start that next Facebook. For other folks, it's just, hey, like I'm trying to get income. And if that's your goal, if income's your goal, then there are a lot easier ways to do that. So if you're thinking about buying one, I'll try to get one that's existing, that has a book of business, that has some income, and doing it that way. So either way, hopefully that answered your question. Let me know. Who was that asked that? LaCroix. Awesome. Awesome. All right. Let's come back. Of course, says thanks. No problem. No problem. Where was I over here? All right, I'll just start here. Chapman Wash says no money down deal with earnouts. Yes, yes, yes. That is exactly it. John says take ace notes. All right. This is been thinking about buying some my first website heavily. Buying some, trying to increase my income. I'm thinking you're thinking about buying like an income producing website, maybe. Darius, let me know if I couldn't understand what you're trying to say there. Trying to increase my income asset column. That's good. Yeah. So I mean, if you're talking about buying an income producing website, we've done a lot of those deals. I will say the biggest opportunities right now are offline, just because we've seen the multiples go up online in a big way, and the offline multiples come down. We're doing deals at below a 2. I mean, Curtis is on. He's done several deals in the ones. I'm negotiating a deal right now that's 1.7. And so what that means is that you're literally buying deals offline where if you don't grow the business, you don't do anything in that business, you're going to get 100% of your money back in a year and a half. And then everything after that is just straight profit. The business you have two options. Like after that year and a half, you buy a business for $500,000, and maybe you put 50,000 down. In a year and a half, it's paid for itself, and now you're selling that business. That's all your cash. So you compare that to the internet deals, and it's gotten more risky. And it's a 3.5 year, which is still amazing. We say these numbers, but it's still almost double the cost. Curtis says he did at 1.2, which it's just like less than a year and a half. You're getting all of your money back, and again, you have the option of selling that business, capturing all of that, and then turn around and putting that down on a larger deal, or just making the cash flow from that. Or refinancing, getting that which right now is the best option for at least the next couple years, even as rates go up from basically negative. That's going to be an amazing option. Tax-free, get the cash, go out and do your next deal, which, even that strategy becomes more difficult as the internet deals have fewer options. They have fewer options. So on financing, but yes, it's not to say it's not worth doing, but I would still look at, even if you're looking at an offline deal, trying to figure out how to look at that deal from the perspective of running it like an internet business. Is also an option. So I would, push you slightly in that direction, because that just makes a huge difference. Again, valuing your time when, you can get all the money back in a year versus 4 years. that's the value, that's time, which, as I will continue to preach to you guys, no matter what the government tries to convince you, no matter what your boss tries to convince you, is your only asset. It's not, people say, oh, that's your most valuable asset. It's your only asset. Once you're out of time, none of the other assets matter. So it's literally your only asset. So to trade it for something that isn't going to, replace that asset, it just that makes sense. So I would consider that. Sounds like that was the right question. That there says yes. I'm gonna come back to you, Prior School, just to see if there was a follow up to that. Yes, I'm very familiar with what you just mentioned. When you say offline, are you referring to businesses that don't operate primarily online? Yes, exactly. So the offline businesses, like Curtis just mentioned, it's 1.2 to 1.5. I'm doing a deal at 1.7. Internet deals are 3.5. Strong deals can be 4. And that just it change. When you're looking at the velocity of money, the velocity of your ROI, that changes everything. All right, come back up to you, Pirate, and then I did see your other question. So great question. Pirate will ask, what multiples are you seeing in SaaS-based deals? I mean, it's high as 4. It's high as 4. So you're literally talking about 4 times as expensive for the same thing, and it's because it's an internet-based business and everybody's moved, everybody thinks that's cool. And just like Warren Buffett talks about, like a lot of times the most money is made not in the thing that everybody thinks is cool, but in the thing that everybody doesn't think is cool. So I try to stay away from the coolest things. All right. For offline deals, and then obviously, I gotta get some more water. So I'm gonna bounce out of here after this one. How to find offline deals, great places, biz by sale. And Curtis just said some of the SaaS deals are getting as close as 5 now. It's just complete nuts. And for me, I was closing those deals 10 years ago when it was the opposite. Actually, it's funny. So you see me talking a lot about the internet deals 10 years ago because it was the opposite. Offline businesses were more valued and they were at a 3 multiple, and the internet deals you could find at a 1, max 2 multiple. And so now that's flipped. And so you want to take note. A great place for offline deals is bizbuysell.com. We get a lot of off-market businesses. So even in that regard, I would at least check out dealmakersinstitute.com. Thanks for popping in. There's gives the 4 thumbs up. I certainly appreciate that. Get some likes from Instagram. Thank y'all for popping in. Before you go, be sure to hit the like button. Feel free to put any comments, questions. I'll get to those in the next live. Have a great weekend.